Yeah. So this is what, episode 28 I have written down?
First episode of 2026.
First
I'm very
episode of
excited.
2020. Maybe, man, I wish this could have been episode 26. That would have been clever.
Yeah, we should have tried to work that
We should
out.
have tried to make that
I
work
give you
out.
that.
Yeah.
Yeah,
Maybe one day we'll end up having these aligned somehow, some way. It's doubtful
yeah.
now because by the end of this year, let's say we do 50 of these, give ourselves 2 weeks off. We'll be at 70, or no, yeah, we'll be at 78, I guess, if we do 50 straight from here. So 27, yeah, no, it's not going to work. We had an
Yeah,
opportunity. I think that window's
we
closed.
missed it. Yeah, we missed it. It's
Yeah,
gone. The
that window's
opportunity is
closed.
gone. I give you
That one's gone.
that.
Yeah, without a doubt.
Yeah.
Well, how about this? There's so
Happy New
much to talk.
Year's. So
Happy New Year's, guys.
Yeah, Happy New Year for all of you guys.
There is so much to talk about. I think we should just jump in, and if we end up getting to some extra stuff at the end, that's perfect.
We have
Like
a
to
lot of
welcome.
things taking place next week, like a lot. So the new earnings season kicks off on Tuesday with JP Morgan. Big deal. Banks usually pull back after reporting. So these bank stocks, all of them, or pretty much all of them, will be reporting trading at all-time highs.
Yeah,
So
near
that is
there.
going to be that will be interesting in and of itself. We have the JP Morgan Healthcare Conference taking place from Monday and on. We could see a lot of pharmaceutical, the stocks of a lot of pharmaceutical companies such as Merck and Pfizer and so forth, being in motion next week. Because of some announcements, or I don't know, maybe they could be up guiding or announcing new, drugs or whatever it is. We also have the Mac 7, the Magnificent 7, which are obviously lagging. They are not going down, which is good. At an index level. Let's just put it that way. But they are not doing anything. They are like
Sure.
just going sideways. That's interesting for sure. What else? Netflix reports in something like 10 days. So yeah, we have a lot. We have a lot going on as of now, bro. A lot. Yeah.
Yeah, no, I feel like it's tough. The Netflix situation, I feel like they're pot committed at this point. They've made such an argument to their shareholders that Warner Brothers is a valuable asset that I don't know if they can backtrack that, even if if Paramount comes back with a $34 price tag instead of 30 or whatever, and Warner Brothers decides that that's better. I fear what Netflix management will do. I honest to God hope they just decide like, hey, you know what, at our current offer, I think it's 27 and change plus stock. The deal makes sense to us, but the price you pay makes sense, or the price you pay matters rather. And for us to go higher than that would be detrimental to the entire company once the merger is complete. And I mean, on the upside, if Warner Brothers were to do that, I believe Netflix is entitled to $2 billion, the reverse breakup fee.
Yeah. I mean, as of now, the deal seems to be a lock. So Netflix is definitely buying Warner Brothers. And now, when it comes to the upcoming earnings report, so the report itself will not be showing any, financial distress. Let's just put it that way, from the perspective of Netflix, balance sheet, income statement, and stuff. But the interesting matter is going to be the guidance that Netflix will be provided. Because if they are very confident about the purchase of Warner Brothers, then the guidance is going to be very interesting when it comes to cash flow and net income. So this is going to be interesting. It will be a very interesting report for sure. Yeah.
Yeah, I'm just sharing here, Polymarket, the latest, who will close the Warner Brothers acquisition. Right now, Netflix with looks like 55% of the vote, and it's up 16% over. I'm not sure what period this is. But either way, I mean, it just goes to show Paramount 28%, none by June of 2027, so none 18 months from now. I mean, maybe you can take that 14% and distribute it equally, but yeah, right now the odds-on favorite is
for sure. Can you figure
Netflix.
just to make a case that overnight we find out that Netflix is no longer interested in buying Paramount, and that maybe they are no longer interested in buying Warner Brothers, or that maybe Warner Brothers is walking away from the deal? This stock would go up $20.
You'd hope so.
On one single trade.
You'd hope so.
And of course, that I've got skin in the game, so that's what I am hoping for actually. But that would be so positive for Netflix. But I mean, let's be realistic. The deal seems to be a lock, and Netflix shareholders brace for impact.
Yeah, you actually mentioned it in the Discord that going into the end of 2025, someone was asking about Netflix, and you said that it could break down lower. I tend to agree. When you see a chart like Netflix's, in a downtrend like that, you know what the catalyst is, and you know something's going to drag out for the better part of a year, most likely, or there's no clear end in sight. You're consolidating from a place of weakness, and you're more likely to break down than figure it out. To your point, we have a quarter coming up, a quarterly report coming up next week. So maybe that changes how people feel, but this is one of the situations, and I mean, I say it a lot. The earnings and the numbers are not the problem. The problem is the
The
strategic
financial,
decision making right now.
yeah, correct.
So,
I
it
think,
is what it is.
yeah, I think that we are getting the. I mean, I never speak in absolute terms. You don't speak in absolute terms either because we speak about probabilities and not certainties. But I mean, I would be very surprised if we didn't see a test of $82. This is the April low of
Mhm.
2025. I would be very surprised if we didn't see a test of $82. And of course, at $82, you're going to have a lot of market participants talking about a potential double bottom situation here.
Sure.
So,
See that?
yeah, I mean, would I be adding to my position at $82 with Netflix trading? So, say that we see a test of $82. I mean, you're looking at a 38% decline, on the stock at a very high quality company, a monopoly. So, despite the fact that we all know that Netflix will be very negatively affected by the purchase of Warner Brothers in, say, in the upcoming 6 up to maybe 12 months from a financial standpoint. Wow, a 40% decline in the stock of such a good company. I think that I would put this in the compelling category. Let's just put it that way. But who knows? Yeah, we'll see if we actually see a retest of $80, $82
I
actually.
mean,
This
just
is
looking at the chart right now, it looks like it has a date with that. I don't
hmm
know. Look,
yeah,
why
this
not? I feel
yeah.
like if there was a poly market for will Netflix trade at $82 in the next
hmm
3 months, it'd be like, 80% yes, maybe even more.
hmm yeah. Would you be buying Netflix at 82?
So, my gut response is yes, but here is where things get interesting. At $82, there's going to be a lot of people that come out to defend the stock talking about its price to free cash
hmm
flow, its price to operating, all of those things. And it's all going to be true. What I'll be interested to see is a pro forma of what their 1 year free cash flow is if they take on Warner Brothers, because I know they said it's going to be EPS positive 2 years post merger, but you can't if the market is discounting Netflix like it is going to take over Warner Brothers with that debt, and not that it would impair the company forever, it would just impair it in the management's estimates 2 years. You can't look at the numbers right now and say that Netflix is trading whatever it's trading at times free cash flow because you need to account for the fact that it's going to need to service
Yeah,
all
of
of
course.
Warner Brothers' debt. It's a really, really
Correct.
hard, like, I would love to say that it's going to have valuation support, it's going to be cheap, it's going to be a no-brainer. And I agree with you. At its face, it looks very compelling. But I have a feeling that
40%
the
decline, though. It's a
right,
lot.
but I feel like when you get investors to come and scoop this up from like a value perspective, like the value investor cohort or the group of people that are looking for growth at a reasonable price, it's difficult to do that when you can't actually determine what it's trading at from any kind of valuation perspective unless you do the work and determine the free cash flow after taking. I mean, it's not impossible work to do. It's probably easy for people that are paid, a six-digit salary to do it. But for people that are sitting at home, I could imagine, and retail investors, I could imagine them just being like, look at everything else in the market that's working. Why am I wasting my time with this?
Yeah, but we should also point out the fact that the financial markets are a forward-looking mechanism, and yeah, if I mean Netflix is acquiring a very toxic asset from a financial standpoint, but we can also make a case that in 6, maybe 8 months, maybe a year, worst case scenario, Netflix could be figuring out the toxic side of the
Right.
deal. And if the markets are thinking about Netflix 18 months out, so $82 could be
But
an interesting level. Let's just put it that way. Yeah.
that's fine. I guess what I'm trying to say, you're right. The markets do look forward, but even from management's projections, it will take 2 years after the asset is acquired before it is accretive. So we're more than 24 months out from this being a good deal for them.
Yeah. So that's what I'm saying. Like you have like like a 6 month, like time frame
Oh, I'm just saying, like,
in which the markets could start to see through this. You see what I'm saying? Like, okay,
yeah.
so
I guess yeah, we're agreeing. I think we're just misagreeing on time. I feel like it will take all of this year. Because if we
it's
don't know who
possible.
owns Warner Brothers, like yeah, if we get clarity that they're going to get Warner's Brothers and we know when the deal closes and we're confident that when that date happens, the Warner Brothers ticker goes away and becomes a Netflix ticker, or the people that were holding Warner Brothers get their cash and some amount of Netflix, then yeah, I think the market can then start to price. It can start looking past that date. But right now, we just don't know. Because I
Yeah,
think
and
part of the reason this stock is so maligned is because there are probably some people that think if Paramount counters, that Netflix might be forced to increase its bid. And if it does, then you need to again readjust for the negative implication. Like right now, at the price they're paying, it's a 2-year window. If they have to pay more, that window is going to get extended.
yeah, and another negative aspect of this situation is also the political part of it. So
Yeah.
we don't know within the current decline of Netflix, what multiples are being discounted because of the political arena that Netflix got itself into.
From what I
So we
understand, from what I
so that's
understand, they
another
got
issue,
the
you know.
okay.
So yeah.
From what I understand, they got the okay from Trump.
But you know that Mr. Ellison is very close to the current administration of the U.S.
Yeah, of
So
course.
there could, within this decline there could also be some sort of a political factor to it. So I mean, it's what a disaster, man. Yeah, let's
No, it's
just
not fun.
let's just start the episode rather.
All right. Yes, actually, I was about to say that is enough on
Yeah,
Netflix. We spent
yeah.
enough time there. Welcome into episode 28 of Charts and Checks. With you, as always, are your hosts, Alvaro Pereira of the Bilingual Stock Market channel and myself, Don Foyani, the gorilla with glasses. Today is going to be the AI adjacent episode of the podcast. We're going to talk about a PLD, Applied Digital, an AI factory, just another name for a next-gen data center. We're going to talk about SanDisk and what they're doing in the high bandwidth space. And then we'll probably talk a little bit about the headlines coming out of Meta this morning, who have signed another power deal with a podcast favorite, Oklo, and a Discord favorite, Vistra. Thank you
Correct.
all for tuning in, and yeah, let's just jump right in. Where do we want to start, Alvaro?
Yeah,
Which
the memory
story would you like
stocks. I
to do?
mean, this
The
is
memory
insane.
stocks?
Yeah, the
Okay.
dips got up so quickly on
Mhm.
SNDK, right? SanDisk.
Yep,
And I guess that the dip also got up on Micron as well because those
I'm sure
stocks
it did. Yeah, I was looking at that, and it
yeah,
was
they
up.
move
It
in
was up pretty
tandem.
big.
Yeah, both. So yeah, you wanted me to
Beautiful.
go over SNDK, which is a company that I am not really familiar with. So if you want to share your thoughts with the
Yes.
audience, go ahead, bro.
No problem. Thank you. So I did a little bit of research on this yesterday, so forgive me if this
Hmm.
isn't 100% accurate to the T, but I didn't actually identify like when someone told me SanDisk was rallying on the idea that they are going to somehow supply high bandwidth memory to the AI factories, is what we're calling them now, or to the GPU clusters that make AI possible. I was like, I didn't know that SanDisk was in that business, but apparently they're developing something called high bandwidth flash, or HBF, which is meant to rival high bandwidth memory, HBM. So it's high bandwidth flash versus high bandwidth memory, HBF versus HBM. For those that are curious about HBM, Micron is the preeminent player in that space.
Okay.
From a technological perspective, I don't really know what the difference is, but for whatever reason, in the first full week of 2026, the market has decided that it wasn't bullish enough on ancillary parts of the GPU AI factory story in the final quarter of last year, and I think we're seeing some of that money come back to these stories now. It's hard for the market to shake the notion that these companies may not be cyclical in the same way they have been in past cycles.
Hmm.
And I
Yeah.
guess just a final sentence on this before I let you dive into the technicals. This to me seems like a TPU GPU scenario where if you want to make a case, you want to be hyper bullish, you want to be divisive, you can say that the flash version is going to start eating the band or the memory version's lunch. But in actuality, I just see this as a company finding a way to make itself a niche in the ever expanding AI pie. I like everything in this space, and it's the reason why if you were trying to build a computer right now, RAM used to be inexpensive. It used to be part of the PC building budget that wasn't
Of
crazy.
course.
Now it could be like $800 for a stick of RAM, and you could need two or three. You could, I mean, some people have four. Need two at a minimum to really get something going. It's crazy what the prices are doing.
Wow. I mean, what can I say about the technical chart? It's like, I mean, there's not really much to say here. Super bullish, clear uptrend above all the moving averages. Someone asked in the Discord yesterday about SanDisk because we saw a bit of profit taking yesterday, and I pointed out the 5-day moving average, which was signaling yesterday, $313. And take a look at the bounce that we saw of the 5 DMA yesterday. Of course, the 5 DMA is higher today because this stock is ripping. It's still the trading session is still running in the East Coast of
Yeah,
the US.
245
Yeah,
ish.
it's 2:43 p.m. So the trading session is still running, and I mean, what can I say here? This push to the upside is a bit extended. So SNDK is trading 31% above its 20-day moving average. So I wouldn't be chasing it here. But I mean, as of now, and according to this 4-hour chart, take a look at what has been occurring or taking place with every single
That's
dip.
insane.
Yeah, dips keep getting bought up. I mean, so I wouldn't chase it here. I wouldn't do from a technical standpoint or from a trading standpoint. I wouldn't be doing anything here. And I mean, as long as the momentum remains in place, I would be a buyer of any dip on SanDisk. So 30% above the 20-day moving average, above its 20-day moving average. Not chasing it here for sure. Maybe give me a pullback down to these rising 5 DMA, $337. I might be interested in buying the stock. And I was very quickly taking a look at the financials of this company, and let me show you this.
Let's see it.
So
I'm really not familiar at all.
yeah, so interesting enough. Let me see if I can share my screen once again because I have it here. Let me see if I find it. Yeah, there you go. So okay, hold and all right. So
Got it?
okay, there you go.
I believe in you.
Please let
There
me
it
know
is.
if you can see it.
Yeah,
If you
I
can
see
this.
it. Yeah, perfect.
So there you go. So it's a small company, a mid-cap company, $55 billion of market cap. So it's been it's struggling to make a profit. Revenue growth is, I mean, nothing spectacular. If we are talking about semiconductor stocks, so three
Yeah.
quarters in a row reflecting quarter over quarter revenue growth, 22% year over year revenue growth, and the company has been struggling in order to make a profit recently. Take a look. So it didn't.
That must have been abnormal.
Yeah, so
But yeah,
it's a bit unpredictable when it comes to generating net income. So I don't know. Maybe the worst is behind, and I don't know, the company we will start to see this company being able to do grow revenue at an exponential pace. You know, such as the case of Broadcom or Nvidia or whatever it is. But as of now, you don't see anything spectacular from a financial standpoint. Let's just put it that way. Let's take a look at the let me take a look at the cash flow. So what do we have here?
Alvaro, if you
Yeah,
don't mind, I think it's fair to say that this company clearly wasn't in the AI business for the past couple of years. It might make more sense to look at like what the projections are because I don't think we're going to
yeah.
see anything interesting here.
Take a look at the jump that we saw on free cash flow
Is
from
that free cash
49
flow?
million
Yeah.
up
Yeah,
to
it's impressive.
438
Yeah.
million dollars. So this is
Hmm.
a very noticeable improvement
Without a doubt.
on free cash flow. And
Without a
let's see
doubt.
what the analysts think about this company. You have 15 analysts covered in the stock. So the most bullish analysts see this stock trading at $410, 12 months out. Then you have $248, and the bearish ones see SanDisk trading at $50.
Yeah.
Um,
They're about two
1 year
months
out.
from changing their price target from 50 to 375, about $5 below, and saying, "Hey, we missed it, but we still think it's overdone." These people don't know how to quit.
So revenue growth for 2026
Yeah, I
looks
mean, look
very
at that.
strong,
Yeah, that kind of explains it.
43%. And
And then
for
EP, you'll get
2027, 22%. So from 2028 and on, the analysts are just expecting the company to provide further guidance, of course. So
yeah.
it's a question mark. But yeah,
Well,
I mean, we
I
can
look
give the benefit of the doubt to this company for the current year and for next year as well.
I look at this, I look at those projections, and I see an analyst community that still believes this is going to be a cyclical name.
Correct. So you have two very good years. That's a very good point. And
Hmm.
then
Very
we'll
bad
see what
years, levels
happens.
out.
Correct.
Part of the optimism could be the fact that at CES, Jensen came out and, among other things, basically informed us that Rubin was on schedule. And again, this is now information that's 3 or 4 months old. I'll need to go check and see. But Micron's HBM chips are the high bandwidth memory that goes on the RAM that goes on those things to make them work like they're contracted. I assume if Rubin is on schedule, meaning that we're going to get the next generation without a delay, maybe there's an opportunity for SanDisk to get their HBFs on there. I mean, that's just purely, I'm trying to make the recent move make sense. I don't have any evidence of that. I'm just saying, like, if I were a speculator and I were to say, well, who is going to buy these HBFs? Like, how many chips are there actually going to be made? When I hear that Rubin is on schedule, I'm like, okay, well, there's the opportunity. There's the door.
Yeah,
There's
Rubin
going
is
to be
expected to be ramped up late Q2 of
sure,
2026. So it's just around
but
the corner for the most part.
yeah, and I think the reason we needed that confirmation is because if I remember correctly, early in Blackwell, Grace Blackwell's release, they had some trouble with the like physical server stacks. Things weren't installing correctly, things were overheating, it just wasn't as effective as they thought, and it caused a multi-month delay. But it appears as though with Rubin, things are on track. And when you're on track, 3 to 6 months ahead of your launch date, chances are you're going to launch on time.
Yeah. Don't you think that this push to the upside is a bit overdone?
Of course. Yeah, I mean, look
Yeah.
at RSI. What is that, 71?
Yeah, this is a 4 hour short, 71. Yeah.
No.
I mean, the short looks fantastic. Let's just put it that way. But I am not chasing this stock here. Micron either. So I would be a buyer of dips. And since I am not a tech expert, I would like to get like more familiar with the space before becoming too bullish on
Here,
memory stocks. But
you
I
know
mean,
SanDisk,
you
Alvaro.
cannot fight with a technical chart. So as of now, the net aggregate opinion of the markets is telling you that they were missing out on this, and that I mean the momentum is there. So above $378, how high can
Alvaro.
SNDK go? I don't know. You set the price 400,
Exactly.
420. Who knows? Yeah,
I
it's a
just
very
want
good
I just
leadership.
want people to understand, like, you maybe you haven't heard of SanDisk or it sounds familiar. Like, do you know what this is, Alvaro? Can you see this?
Let me take a look. Hold on. No, I'm not seeing. Yeah, that's a memory chip, right?
This is an SD card. This is what SanDisk does.
So
I mean,
that's why the name sounds familiar to
yeah, I
everyone,
mean,
right?
you they have the adapter, you put them in
Correct.
cameras. I'm sure they do more, and obviously the high bandwidth flash is completely different. But
Correct.
that's why when I heard they're doing AI memory, I'm like, what? So this is the definition of the market pricing in a future that is completely unrelated to the past. This could be a
This is
material shift for
another
the company.
this is another company and another space that is starting to be positively affected by this new phenomenon of artificial intelligence. So that's what it is. That's what it
Yeah,
is.
it's an innovation on an older technology that makes the company that was once irrelevant relevant.
And that fits. So far, he could be mistaken at the end. This fits into the knives narrative or narrative. Like this is just the beginning. We are in the it's 11 a.m. and we party until 5 a.m. So far so good for Mr. The Knives. Yeah.
I think, well, if you want to talk about it in another sense as well, we're seeing productivity, measurable productivity in the data go crazy. It's no longer just stories, it's no longer just anecdotes. It's actual measurable data that is showing AI productivity is in
Picking
the
up.
real economy.
Yeah. Speaking up.
So, we just started seeing it. We know how much money is going into it. One should probably, like, do you really want to be on the other side that this one little boost in productivity is all we get? I don't. That's all I'll say about that.
I gotcha. So
All right.
so
I'm ready
SanDisk
to,
is out of the way. Now
yep.
what comes next? Next
We
topic.
could We could do Apply Digital, or we could do.
Applied Digital.
All right,
So
let's do
yeah,
it.
we were day trading that stock in the Discord yesterday and today as well.
Mhm.
And I don't know anything about the company, but the technical chart is starting to look very good. And they just reported earnings, and I think that they missed on something. I don't know if it was like bottom line or top or bottom line I don't remember because I didn't see the actual report. But they up guided big time, and the stock is soaring. So, what do you know about the company? Another AI related study?
It's a data center, from what I understand, but I guess more, if you'd like to use the term that the industry professionals are using, you'd call it an AI factory, which is a next gen data center.
Okay.
You nailed it on the quarter. It was an amazing guide, and they announced a spin-off of Chronoscale, which I believe is the pure play on that AI factory data. I'm not exactly sure what the spin-off is meant to do, but obviously shareholders in the stock loved it. And it was such a good report. I think you can make the argument that the AI factory data center trade that went really stale in the final two quarters of the last year is back on. If you look at Nebius, MVIS, and IREN charts we've looked at in the past, they now
Mm-hmm.
all look the same. They look very similar to what you're seeing right now with Applied Digital. Just they don't have that breakout candle, which leads me to believe that if Nebius and Iron can put together some decent quarters, there's some material upside left in those names. The only name that's been left out is CoreWeave. I don't really know why, but it's worth noting that that could be a sleeper as a laggard in the group, and it's not too late to get into that one if you'd like to try to pick a laggard in the space.
Correct. Yeah. So take a look at this, bro. I don't know if this was the last report. Maybe it wasn't. But take a look at that explosion in revenue.
Yeah,
Unbelievable. Not only all time highs. So revenue went quarter over quarter from $64 million up to $126 million. So this company is experiencing as of now a stage it's in the midst of a new phase for the company when it comes to exponential growth. So year over year revenue growth was 250% from 84% on a sequential basis. So I
sure.
mean, talk about growth. So
No,
impressive.
no, no. It's you could say it's inflecting to the upside. There's nothing really more to talk
And here
about.
comes the big the first issue would be that this is not a profitable company yet. So they've been burning money all the way back from 2021. Let me see if the markets are expecting or the analysts
Something to
are.
note, I think they have an open credit loan or revolving credit with, I can't remember the name. It starts with
Okay.
an M, but it's like 5 billion, and it's a great, like they have access to credit at a good price.
So they are not making any profit as of now, but the good news is that the analysts are expecting Applied Digital to be able to make a profit in 2028. So maybe the best is still yet to come for Applied Digital. Take a look at the revenue growth expectation, bro. So for this year,
Yeah.
113%, 71% in 2027, and 74% in 2028. Jesus Christ. I mean, it's a small company, of course. So
Yeah,
that would
Alvaro,
allow the
it's
company to be able to grow revenue at an exponential pace. But I mean, the markets are expecting this company to keep growing at a very noticeable pace, at least in the next 3 years. So yeah, I mean,
well, I mean, it's a $10 billion company, clearly smaller in size. Not to be flippant, but
yeah, no P
earnings don't
ratio, no
matter.
forward. So the markets are not expecting Applied Digital to make a profit at least within the next 12 months.
Here's it.
But
I just don't think an inflection to profitability drives this stock. This is still a revenue company.
yeah, this is a growth stock, 100%. Yeah, 100%. Hey, I'm curious. So let's see. Let's take a look at the analyst expectations. So we have a price target of $58, which would imply
Well,
that
we're
this company could
37-ish
go.
right now.
Yeah,
Yeah.
take a look. It is at $37, $35, which is the price target of the neutral ratings 1 year out, and you have some analysts expecting this stock to be trading at $7 in 1 year. So, I mean, so the what I would tell the guys, Don, is like, do not fall in love with these kind of stocks. So sometimes the guys mistaken a stock that you can trade with a stock that might be the future, bro. So this is still speculative company. The technical chart looks very good. Maybe there's a legit AI study behind it. The company is growing at a very, very, very aggressive pace, but until this company doesn't make a profit, I mean, this is a ticker that you can trade. But sometimes the guys fall in love and they start saying, "Oh, Applied Digital is the future and it's going to the moon, and should I invest on Applied Digital from a long-term perspective?" So do not fall in love with these kind of companies. Just trade them, in my opinion. What do you think?
I don't necessarily disagree, but I would say that if you are a growth investor, you will oftentimes take a long-term perspective on companies that have yet to turn a profit.
Yeah.
I mean, I don't know. I don't have anything else to
But you
say. I mean,
wouldn't
you
buy.
have your way, you have mine.
You would not be buying Applied Digital from a
No, no,
long-term
no.
perspective
But
here.
I mean, well, that's just here's the thing. I wouldn't buy Applied Digital at 37, but if this thing comes back and I can get it at a price that is lower than the price where we had a good earnings report and got good news, I would make the argument that the stock is undervalued, and in the idea being we've seen the stock trade higher on worse fundamentals.
Yeah.
So I for one, I mean, listen, you have to, if you're, again, depending on your position, how much risk you're willing to take, you need to size these things appropriately, and you can't have too many of them in your portfolio.
Sure.
I mean, I love Josh Brown, and he talks a lot about Joby. They don't got a profit yet, but he's super bullish on them because he
And
believes in the
robotics as
story.
well. Yeah.
Right.
Which
I mean,
are
I'm just
speculative
making the
companies.
point that if you want to get in on these things that could be 10 or 100 baggers, you're not going to be able, you can't start buying them with the first EPS positive quarter. You got to get in earlier than that.
Correct, but you need to size that position properly. Let's just,
Of course, of course.
that is
I
the issue.
wouldn't, and I'm not chasing this. The only way I would get into, the only way I would even consider trading this stock is if it blew above 40.
Yeah, I mean the chart looks very good. So all-time highs comes in at $40. If this stock
Now,
bursts above $40, I mean you set the price you want, 55,
right, but
60,
I look
whatever
at
it is.
this, I see double top incoming. I don't know about you, but
Potentially.
yeah, I mean
We would
it's
we would have to wait until the double top is actually confirmed.
of course.
But I am a buyer of dips here, so give me a pullback down to the rising 5 DMA at $32, and I am potentially buying the dip here. Yeah, it's possible. So this is a very good
I
looking
mean, that's a
chart.
huge move. That's what, $5 on a $35
But this is a very
stock. I mean,
volatile stock,
that's a
Dan,
huge
so-
move, though, man.
Yeah, I know, but would you be surprised if we see $31 next week on Apld?
I don't know if I'd say surprised. I guess the point I would make is
very volatile. So
if this stock reverses this move in a week, then I would be of the opinion it's going to go lower, not find support. Like you'd want to see the bulls defend this higher price for longer than a couple of days. No?
yeah, but correct. But again, it's like a very volatile stock, so I would be a buyer of dips. And
Okay. Yeah, whatever.
since I am an opportunistic buyer of dips, I wouldn't be pissed if we see $32, $33.
Oh,
Some kind of pullback that kind of gets close to the rising 5 DMA, which as of now is signaling $32, and I might be interested in buying a dip down there.
I
But
mean,
yeah,
I like the story more than I'm letting on. I'm just saying, if this stock gave back all of that gain in that short amount of time, I feel like the Bears would have a better handle on that than the Bulls.
that's
Like I don't want to see gaps get filled to the downside in a day. That's just
no,
that's
no. But
not
I'm
great.
saying like say a week or a week and a half, a bit of profit.
Okay,
taking,
yeah, whatever. If
whatever.
it's slow, sure,
Correct,
sure.
correct.
I just don't want it to be violent.
Correct.
Mm-hmm.
Agreed. Yeah. So Applied Digital out of the way. What?
Yep.
comes
All right.
next?
We'll move on now to Meta announcing that they are going to be purchasing energy from Oklo and Vistra. Just a few words on that. In my opinion, this deal provides a nice counterbalance for I want to say the bear thesis that came out of CES for these energy names. On top of telling us that Rubin was on schedule, Jensen
can I make a
also,
distinction here before
Yeah.
you keep going?
Of course, yeah.
Which I think is a very important distinction. So, Oklo is a super speculative company, and
Yeah.
Vistra is a real.
It's
company.
more established. It's an actual
It's a real
utility.
company.
They serve
So-
customers in Texas.
So,
Yeah.
So that gave me a good bit of laugh today, bro. So everyone was talking about Vistra and Oklo. like if they were the same thing. But oh boy,
No,
they are not the same thing.
no, they're very
So give
different.
me Vistra all day long. All
Yeah.
day long.
And we can
Okay, that's an
focus on
important distinction that I
Vistra.
wanted to make. Go ahead, bro. Sorry.
No, no, it's an important distinction. Half you got it out there, and we can just cover Vistra from the technicals and the charts from you want. Because I mean, Oklo, I'm sorry, it's still a zero revenue company. There's not much to look at.
Correct.
So, coming out of CES, Jensen not only showed us that Rubin was on schedule, but that it was going to be more efficient, especially with inference, than we previously expected, which dampened the bull thesis, or rather the final number, the final demand of energy that be required to meet our AI needs. I'm not sure if I buy that pessimism. In my
Mhm.
opinion, if we're getting a chip that makes AI more energy efficient, one could argue that that just opens the door for more
For
companies being
more
willing
AI
to use it.
demand. I agree with that.
Exactly.
Yeah,
All that said, though, I like
correct.
the fact that we see a market that's discerning. Like, you got that news out of CES, it changes the demand picture, so people take some profits. You wake up the next day, Meta's like, yeah, that might be true, but we don't have enough energy. We still need to buy more.
Hmm.
And
Yeah.
the market goes, oh, okay, maybe we overreacted. And we'll see how these big moves hold up over the next couple of days. But I have it actually very happy to see a lot of this price action coming out of both headlines, just like
And you,
that.
you, you make an excellent point, bro, because say that effectively Rubin reduces the energy demand, but that
Yeah.
implies that you could have more data centers because now
Or you
like like
do, yeah,
like the data centers that we have as of now are more energy efficient, so that allows you to
right.
have more data centers. So i
Yeah.
i, I don't see how that this is bearish for these kind of companies because they took a hit once Jensen presented the Rubin's new features in Vegas this week, right? So that's a point
I'll
that
try
you're
to,
exactly
this
making.
is this is how I would make it make sense. It's a timing issue. If you think that there's going to be a total amount of energy over the next 5 years, and then Jensen comes out and says, well, actually, that number is less, you need to take a hit. But if you then get like, because you're the same
That
energy
adjusts the
over a
multiples a
greater
bit.
amount of
It
time.
makes sense, yeah.
Exactly. But then when Meta comes out and says, yeah, that might be true, but we still need energy today, it provides a nice counterbalance. And maybe it's enough for VST to finally form a durable base, because this thing has just been going down for the better part of 6 months.
So, since this is a real company, and I am about to go over the financial situation of Vistra
Mhm.
Energy. This is a deep, bro, that I am seriously interested in buying, and I was talking about this with the guys in the Discord today. So, $170 is a previous level of support and resistance. That if happens to be recaptured by the bulls, and despite the fact that this is not a good looking chart, so we have a
No,
declining
that's a
100
huge
EMA.
saucer top.
Correct. So we have also a declining 50-day moving average. If we display an anchor VWAP from all-time highs, we'll obviously confirm that we have a lot of buyers trapped on the way up. But since this is a real company, and a very good company, by the way, I am about to show you the financial situation of Vistra. And now we have made a like validating Vistra, which was a regular, I would say we can argue some regular kind of utility company. And now that we have that this new artificial intelligence factor related with Vistra, this company starts to look very very interesting, bro, and compelling. I'm not gonna lie to you. So next week, then, if I see Vistra trading above $170, and by the way, today we got an unusual collapse alert on VST.
Mhm.
I am probably doing something here, man. I'm not gonna lie to you. What do you think about it?
I love it. I'm in it. Me and my friend run a portfolio that
Uh-huh.
has it. We saw the news. We're already as heavy as we want in it, but we both agreed that we would find some money to put in it if this kept working. Because I don't want to say we're trapped in it, but we're down, let's say 7% after today. So we bought and we kind of stuck with our guns. I
Okay.
would say that if you just want to buy this and you just want to trade it more casually, here I'll pull up my chart of it. Uh,
Go ahead, bro.
yeah, sorry. Because I think you have an opportunity to do a very very simple trade here. This is Vistra. You don't just for the sake of it, ignore the 200-day and the 50-day. That's in orange and white. It's not important. You can buy today and just set a stop loss at 150. Because if this stock goes below
As a trade,
150,
yeah.
Yeah, if it goes below 150, then it turns out the market has decided that it's not actually optimistic, or the positive news had no staying power. That's what I would do if you just want to trade it. I know that that's, let's say 18%, 18, let's just say that's a 7% move, 7 or 8% move. If you're willing to take 7 to 8% risk, I'd say that that's where you go. I would expect buyers to step in at 150. So wait for it to really give up 150. You can see that. Let me draw a line here. Go with 150. Not only is that where it hit, but it's a pretty important level of support for the stock. This is where it came out of the tariff tantrum. It was a point where the stock has paused in the past. And let me just see what it looks like on this multi-weekly thing. Yeah, I mean, yeah, right now
The,
you're
st-
dealing
the,
with the 50 week. Yeah, I mean, there's nothing really to see there. But
the stock has gotten annihilated as of now. How of the highs is this thing? This stock is trading 22% off its most recent all-time highs. So this is a fair discount. And yeah, I mean, the market's already adjusted a bit the multiples of this company, and now we got the very positive catalyst of Meta. So if someone wanted to have some sort of exposure to this kind of theme, I think that this could be a very interesting way of having some exposure to the energy for data centers and stuff like that. And I wanted to show you this then.
yeah,
So
let's see
take
it.
a look. Take a look. I mean, we cannot even compare here, like an apples to apples. So take a look. Take a look at the revenue. $4.9 billion in revenue on the last reported quarter. Take a look at the net income of the company. Absolutely profitable. Not a lot.
Mhm.
I mean, it's a utility company. So
Oh,
this is
one
a big.
thing.
Yeah, go ahead.
It's an unregulated utility, if I understand correctly.
Mm,
And the distinction is that a regulated utility
yep.
company, if they change their rate, need to get approval from their regulators. I only bring it up because I recently wrote in a something I did on YouTube or whatever that I sold out of D because I don't think any regulated utility is going to be able to push a price hike while affordability is a political issue. VST does not suffer from that same potential
That's it.
headwind. It's
Okay.
not part of that story.
$652 million on net
Right.
income on the last reported quarter, and take a look. This is a classic within the utilities sector. A lot of debt relative to the cash position. So the company has a long-term debt of $15.7 billion and 602 million dollars on cash. So this is a super classical aspect of any utility company out there, that they are buying back shares in a very aggressive fashion.
Well, yeah, yeah. Sorry, I guess that's kind
Free
of the point
cash
I was
flow, $1
making.
billion.
It's
So
it's an independent power producer. It's not a regulated utilities
yeah,
can't look like this. So
correct.
yeah, exactly, yeah.
But again, it's like correct. It's unregulated, but it has characteristics that we can link to a classic utility company. The
Yeah,
company has a free cash flow
yes.
of $1 billion,
Hmm.
so they are also paying a dividend. The company
Hmm.
is producing free cash flow, so the dividend should be fine in the future, or in the near future, we can say. So I don't know. I am not going to be comparing Vistra Energy with Oklo, of course, right? But
No.
if I wanted to have some sort of exposure to the space, I would never ever buy Oklo, and instead, this could be an interesting option, because given the current financial situation of the company, this company has the ability of attracting institutional money into it. So that makes it interesting in and of
I'm
itself.
sure there's already some institutional money in it, but yeah.
100%,
Mhm.
100%. And in the case of Oklo, I mean, I don't think
Well, if
any
there's a few
serious.
people, I mean, who's the guy from
Who's buying this? Dan Ives
who?
and Tam
Not Dan
Lee,
Ives.
maybe?
What's
I don't
his
know.
name? You know what I'm talking about? Belsky. Belsky loves this name.
Oh, really?
Yeah, big fan of
I
this
mean,
name.
go figure. In the case of Oklo, I am going to give it a pass. I mean,
Yeah, it's giving up this move, whereas VST I think is actually keeping some of it.
mhm. Yeah, they
Which
sold the rip got sold. Yeah, but in the case of Oklo, I
VST's
mean,
VST's not doing his best. Well, VST's giving up some of it too,
so
but
from a
yeah,
trading standpoint, from a strict trading standpoint, say that Oklo holds this 100-day moving average as support, $103. Maybe you buy the dip. Maybe buyers show up, and the stock can keep going up.
eh,
But But I mean,
I'm
that's it.
I'm
This is a
when it
trading
comes
vehicle. This is
when it
not an
comes to
investment
name
vehicle.
like when it comes to name like this, I'm a buy high, sell higher guy. I wouldn't be trying to buy it here. I'd buy it if it gets above 120 and ride it to 140. I just feel like your win probability is better there. I feel like 120 is going to be a stiff number to get above. If you just draw a line 120 or horizontally across that thing,
Yeah, okay.
it's
Levels, yeah.
it's stiff.
Resistance,
It's
yeah.
stiff.
Yeah, correct. And let me check super quickly here. I'm curious about an anchor VWAP that comes from all-time highs.
Yeah, go for
So
it.
I have a guy in the Discord in Spanish that got trapped on Oklo at $160, and I asked him, "Hey, bro, why you didn't lock in the profit at $160?" Oh, because I don't know, I got too bullish on the stock. Well, you shouldn't have, but whatever, it is what it is.
Fell in love, I suppose.
Yeah, he fell in love
It this is a
with a
these are
highly
dating
speculative
stocks.
company.
Yeah.
Oh, take a look at this. This is interesting, Dan. Let me show you
Mhm.
this. So let me share my screen once again because we're talking about Oklo. So let me see.
Yeah, sure. Let's round it out.
Let me show you. So take a look at the level at which Oklo is failing at for the most part. This is an anchor VWAP that comes from all-time highs. So what information is this a VWAP sending us? Well, that the average market participant that started the position in Oklo at $193. Jesus Christ, who was buying Oklo at $193?
Yeah,
My
leave
God,
your
my
name in
good.
the comments if you're brave.
I don't know, my goodness. So the average market participant that was buying Oklo up there at almost $200 has an average price as of now of $110. So we can make a case, and to your point, Dan, that should Oklo be able to hold $110 as support? So in other words, if these market participants that have been dealing with unrealized huge losses can defend price at $110, that situation could be potential attracting buyers into this technical short. But
Yep.
the price action that we saw today, because both move, so both pushes to the upside ended up being faded. So that leaves an interesting scenario for next week. So will these tips get bought up? If I were interested, and I'm kind of interested in buying one of these tips, I would be buying. I would definitely be buying Vistra instead of Oklo.
No, totally agree. Sorry about that. When he
No,
when
no,
he
that's
gets up
okay,
on the
bro.
chair like that, he's about to bark. So I had to tell
That's
him
okay.
to come
No, no, no,
down a
no,
little
no,
bit.
not a problem. It's
I
real
think you've
TV.
nailed it. I don't have anything else to add on Oklo or on Vistra really. If you other names in this space would be Constellation Energy. They also do nukes. Their chart. Well, I can just show you. Their chart kind of looks ugly too. It got hit when all the other stuff got hit the other day, like we were talking about with the Jensen Rubin efficiency narrative. If it gets above the 100-day, you can feel better about it. I like the fact that it didn't even get to the 200-day before people stepped in. But right now, it is battling the 150-day. Close above the 150-day, you can get excited. I have a little bit of money I could put into this because I sold Dominion. I'm considering it. But I don't know. These charts just don't compel me to do anything at this point in time.
Can we make a case, bro, that the rotation is very obvious here from energy related stocks in the artificial intelligence space into memory stocks?
Yeah, I think the market is sniffing out the fact that the higher growth is going to come from there.
Like
That's all I would say.
from the memory stocks?
On a percentage basis, yeah. Like how
It's like
it's
the markets
possible.
are still undecided. So that's the point that the knives makes, Dan. Like, okay, so they at some point they are like, okay, this is the winner of artificial intelligence, and this is the loser. But all of a sudden they find a new winner, and this is the new winner, and the other one is the new loser. And the
So
point that the knives is making is like, bro, I mean, most of these companies will be winners. So you're gonna have winners for the most part in every single space. So you can be like, like a stock picker. But
I know I agree. I don't think you should sell your Nvidia or sell your Broadcom. I just think that the
correct.
market thinks that Micron or SanDisk is going to grow at 60% revenue, and Nvidia and Broadcom maybe don't get to do that. And just for the record, here's Nvidia, here's Broadcom,
Yeah, way off the highs. Yeah.
here's SMH, new all-time high. And as we know, Broadcom and Nvidia are
Super
a huge
heavy
part of this
holdings.
index. I mean, TSM is too, and TSM is also near a new all-time high, just to
Yeah,
show
because
you.
TSM is the one that is going to be selling the bullets.
100%. Yeah, and I guess the point I'm
It's a
making
war,
by
they sell the
showing,
bullets, so they are an obvious winner, regardless of whatever. So yeah.
yeah, the point I'm
And now that
showing you,
that
yeah,
that makes me ask you,
Yeah.
because the new earnings season kicks off on Tuesday with JP Morgan. And that is going to be an interesting one, Don, because we're seeing the everything rally, but the Max 7. But we all
Sure.
know that the vast majority of gains that the S&P 500 has delivered as a whole during the last 3 years have come from the Max 7. So it's gonna be interesting, right? Because the markets are like, okay, the rotation and the rally is broadening out and stuff. But now we have it's gonna be interesting to see what happens, because if these stocks keep outperforming the rest of the markets from an EPS and revenue growth standpoint, this is going to be interesting, bro. Say by mid-February or maybe late February, because the analysts that are very familiar with the space are stating that all of these companies will end up killing it potentially, because we always speak here in terms of probabilities and not certainties. So that is going to be a very interesting situation. Say by mid-February, what is going to happen if these companies keep delivering unbelievable results and the rest of the markets? Yeah, I mean, it was a good report, but you didn't get the growth that these companies have been showing during the last 3 years. So that is going to be a very interesting situation potentially, say by mid-February.
I was joking around with someone in the Discord that making 20% on a healthcare stock is like making 100% on a tech stock, because the expectations are different.
Correct.
While
100%.
we might see, let's just say NVIDIA gives us 50 or 60% revenue growth. That's impressive, but we're used to it, and we've priced that in. Let's say we wake up and JP Morgan gives us 20% revenue growth. No one's expecting to, see, that is like if NVIDIA did 150%. And that difference in expectations is what's going to allow for some of these other parts of the market to provide us a little bit of cover, so long as the generals in the market don't keep sliding. The good news is that I think there are still a number of investors that are more value oriented, that will look for more mature companies, that when they now look at NVIDIA, and if Broadcom keeps going the way it's going, we'll look at Broadcom and say, oh, okay, 60% revenue growth or whatever. I don't know what the earnings growth is, but at a multiple that's like, 25 or 30 times, I can buy that. I can hold that. Well, we'll see. I mean, it's as long as these things can stay afloat, I'm super optimistic. And yeah, okay. Sorry, you have a chart up here. Go for it.
No. So the point that I'm trying to get across is this is the point. Microsoft, a company that has been killing it over and over and over and over again. It's, as of now, trading 15% of its most recent all-time highs.
Yeah, it's going to slow bleed.
Okay, so next, Meta, killing it during the last 3 years. Let's go see Meta. Meta is trading as of now.
Such an ugly chart.
Oh, horrible. Meta is 20% of its most recent all-time highs. But let's keep going. Yeah, what about NVIDIA? Look at NVIDIA. NVIDIA, I mean, their last earnings report was absolutely unbelievable. NVIDIA is 13% of its most recent all-time highs. And I keep going. I can keep going and going and going and going. So the point that I'm trying to make here, Don, is that since most of these companies will be reporting 2 or 3 weeks out, I would be personally surprised. And of course, I always speak in terms of probabilities and not certainties.
Yeah.
I would be very surprised if we don't see at least a front running into those reports. So I am expecting
front running. Go ahead.
The markets getting optimistic about Microsoft.
Oh, you think they'll buy them going into the report?
Yeah, going into a report. That's a front running operation. So I would be surprised, and it could happen. I am not making any predictions here. I am not in the prediction business. I am in the business of understanding the message that the technical chart is sending me. But I would be very surprised then with these stocks of companies of an extremely high quality being 15, 20%, 25% of their most recent all-time highs. I would be very surprised if these companies keep pulling back into their earnings reports. And if that were the case, because it's a possibility, that could happen, I think that this could be a potential easy trade when these reports come out. Say that Microsoft cannot hold the 200-day moving average as support and keeps going down and breaks last week's low for $170, and say that Microsoft, which reports on the 28th, by the way, of January, is trading at $450. The day that the report comes out, say that Nvidia reports trading at $170, $165. I think that would potentially present a trading opportunity into those earnings support. In my opinion, and you can hold me accountable for this.
I think that's reasonable.
Might pull up into the earnings support. In my opinion, we'll see what happens. I've been mistaken before. I could be mistaken once again, but I don't know. This could get interesting when those before the reports come out or when the reports come out. We'll see. Maybe the markets are up to something, and they are suspecting that these companies are going to report worse than expected. I don't know.
No. I think that the way I view it the same way as you. Let's say there's no run up into the quarter. I would be more tempted to buy it. It's like, all right, I believe in these companies, and if you've done nothing for 3 months or gone down for 6 months, and you give us a quarter that's better than anything we've heard in the last 6 months, you deserve to go higher. Now, I'm not saying that that's going to happen. We just speak in probabilities, of course, but I love the situation of there's room in the price for expectations to be exceeded. That's a great place to be.
And take a look at this, then. Let me show you this before we wrap it up. Take a look at the earnings support that Microsoft did on April of last year.
Yep.
Take a look at the reaction. Higher.
Yeah.
Okay, take a look at the second to last report. Higher, but the rip got sold. Take a look at the last earnings report. Immediately, so the very first reaction was positive. So what does this imply? That Microsoft has been killing it when reporting over and over and over again. The markets know this.
Yep.
So this is the reason why I would be very surprised if Microsoft, for instance, keeps pulling back into the print. It could happen. And again, I am not making any predictions here. But if you know that this company has been killing it during its last earnings reports, you know that maybe the probability or the possibility for Microsoft to report better than expected again is higher or is high relative to the probability of Microsoft disappointing on the upcoming earnings report. So, and since we are talking about the stock of a company, of a very well-known company, by the way, that is widely owned by institutions, and this company, which again is a very high-quality company, and Microsoft is trading as of now 15% of its most recent all-time highs. I think that there is a potential front-running trade before the earnings report comes out on the 28th, I think, that Microsoft reports. Yeah. And if it keeps going down and this 200-day moving average doesn't hold, then you know that I am actively trading earnings reports. So that's why I'm saying this, Dan, because you know that I have a tier in the Patreon in Spanish in which we are actively trading earnings reports. And I mean, I will leave it like that.
Sure.
There you
go. I got one thing for you before we wrap up. This can be the last thing.
Sure.
I'm going to share with you a chart.
Go ahead.
This is a 3-year chart. This is percentage change over 3 years. What do you think the blue line is? The blue line is an index. I'll give you that. And the red line is an individual stock, probably one of the 20 biggest stocks in the United States.
So the blue line got to be the S&P 500.
It is the S&P 500.
There you go. Okay.
And what do you think the blue line is?
Give me 10 seconds. Okay.
No, take your time. If you want another, I could maybe.
So
I'm thinking of a hint.
Yeah, this stock is highly correlated with the S&P 500. So it gotta be a big company, of course.
Huge.
Wow, the correlation is impressive, man.
3 years.
Impressive. I mean the same thing, right? So, what is it? Can it be Apple?
No, it is not Apple.
Okay, so what other stock is so highly correlated to the S&P 500, bro? I mean,
it is the. I will give you this.
Okay.
It is the 12th largest company by market cap in the United States.
I don't know. I mean,
This company is JP Morgan.
oh, good figure. The
And
largest
the
bank
reason,
in the world. Yeah. Private bank of the world. Yeah.
private bank in the world, yes. The reason I bring this up, and it's not to poke fun, it's just because I think I did a bad job making my case over I'll stop sharing this. I did a bad job making my case over Christmas where I was talking about how the S&P 500 isn't necessarily a tech index. The point I was trying to make was
It's a
that the
financial
S&P
index.
well, it can be a chameleon, and right now it's a
Yeah.
financial
But
index.
yeah, but don't get me wrong, bro. The financial sector is a very important sector inside the S&P 500. That's
Oh,
why
no,
that's
yeah,
why I
yeah.
track the financial sector every single day during the live streams.
If
Yeah.
you have financials doing this, there's no argument for a bear market. There's no argument for a slowdown. This is telling us that there's loan growth. This is telling us that there's robust spending in the economy. This is all very pro US economy, which in a weird way is also kind of anti rate cut, but we don't need to get into that.
Take a look. So this is the flexible grid that I use
I love,
during
yeah,
our
yeah,
live
yeah.
streams.
It's a good, yeah.
During the trading sessions, take a look. XLF.
No, yeah,
I
it's
keep
awesome.
an eye on
It's awesome.
financials every single day. This is an important sector inside the S&P 500. Of course, it's not as important as the tech sector, but this is an important sector, bro. Yeah, healthcare, tech, and financials. There goes the
Yeah,
S&P
I
500.
guess the reason I'm doing this is like, at certain times you have certain leadership groups, and sometimes it's very obvious what's leading what. We spent so much time, not we, but like the general we or the royal we, about technology and the impact of the index. And right now, the S&P 500 is just kind of doing what financials are doing, and that's kind of awesome.
I didn't know
for
that
us.
that there's such a tight correlation between the S&P 500 and JP Morgan. That's impressive, man.
There
That's
there
very
were
good.
some gaps in there, but the fact that over the
No,
last
but the
3 months
correlation
it's
is,
been
I mean, they
so
move in
tight.
tandem, bro. You can tell
Yeah,
they move in tandem, 100%.
impressive. And I mean, it makes sense when you think about it.
Correct.
All
Yeah.
right, man. Well, hey,
Bro,
dude,
so
thank
that's
you
a
so
wrap.
much for your time. It's
Yeah.
a good hour
It's the
there.
first episode of 2026.
The first episode of 2026, episode 28 of our podcast, AI adjacent, Netflix, JP Morgan, and what else did we talk about? Something else?
Yeah.
Who else did we
Hey,
talk-
I have a last minute challenge for us.
Okay.
Okay. Probably, not for sure, but probably, this year we'll get a 10% correction.
Yeah, no, I would bet
Okay,
on
it's,
that.
it's
Yeah,
a possibility. You never know. Okay, you never know.
I'd
We
say
cannot
yes.
predict the future. Okay,
I can.
so if we get a 10% correction, at what point of the year you would think we would be down 10%? So
I
we can.
think it's-
So whenever
yeah.
we get the 10% correction, we can reconcile that situation with what we said on the first episode of the year.
So here's my
I have my answer, but I thought about this ahead of time, so you are in disadvantage relative to me.
I'll say this. I actually think it probably happens at the end of Q3.
So September, you will.
No, oh, sorry, I'm an idiot. Sorry, at the end of Q1, at the end of the first, in month 3 or 4, I think it makes sense. I think there's a lot of, I don't want to say risk, but let's just say volatility involved in what the Supreme Court's going to say soon, what the administration does after, a new Fed chair, and if the market has priced that perfectly, then I'll get that wrong.
Okay.
I just think that there's such a window for the market to have mispriced something right now because everything is so good that if something doesn't go not wrong but off by the 3rd or 4th month of the year, I'll be shocked.
Yeah, I'm thinking about late May for a
Okay,
10%
we're
correction.
a little later than where I'm at, but very similar.
All right, so we'll reconcile the 10% correction if we happen to get a 10% correction with.
Yeah, this is
our
we just
estimates.
made a little vibe cast. That was nice. There's no
these
science
are
there.
correction estimates, so I like it.
No science there.
Yeah, there you go.
All right, guys. Thank
Thank
you
you,
so
guys.
much.
See you next
Thank you for
week.
joining us. We'll see you next week. If you're here, you know where to find Alvaro in the bottom link in the description. You can find a link to my blog, my YouTube, and of course the Patreon too, but also the Discord, where you can find me chatting. In fact, I I bought Intel today, and I told the guys
that was a fun post. That was a fun post.
I told
Don was
everyone
like,
to
"Hey
close.
guys, I'm buying Intel here, so go ahead and buy puts because it's going down."
The market has a great way of doing that to me. I always find a way to top
everyone,
tip these
actually,
things.
to everyone. Yeah,
Yeah, no, let them know that if you have a position, you're happy with it, maybe just
that
get
was a
rid of
very
it.
fun post, bro. Yeah,
I'm gonna
that
buy
that
I'm
post
gonna
was
buy the
fun.
top tick.
Funny post.
But yeah, no, it's a good time. It's a good time.
Yeah,
All
hundred
right, yeah.
percent.
I think that's everything. Thank you guys so
Take
much, and
care.
we'll see
Bye
you
bye,
all
guys.
next week. Bye bye.